All right, so we got to talk to you about this big deal between Nvidia and OpenAI, up to $100 billion. But there's one important caveat to this deal. It's not just Nvidia investing in OpenAI and say, hey, take the money, do with it what you will. The idea is that OpenAI will use that money to buy Nvidia chips. Now, according to our notes, you say your channel checks have showed the data center demand has increased since July. But what do you make of a deal where a company invests in another company to get sales from that company? How does that change, or does that change your view of the AI trade and the growth that we're seeing?
It really doesn't change the view. In fact, I think we view it as quite validating. You've got companies that are occupying all different parts of the ecosystem here. And what's interesting is that in both cases, the spenders here, the hyperscalers, and then also the suppliers are extremely profitable, doing extremely well. So it's not a subsidy in the traditional sense. And certainly what we do see is there is tremendous capacity constraint that's got to get fixed. It's in everyone's interest, so we're very positive on it.
All right, very positive on it. Is this also a bullish sign for some of the second derivative plays, whether you're talking about power players? Oh, yeah. So please, I feel like I'm interrupting because you were ready to go on that one. What's the next beneficiary after, of course, chips, and we're looking at this trade right now as we go into the fourth quarter of this year? Is it power? Is it servers? Is it data centers? Is it some other, what some people may even think of a third derivative, like glasses for phones that are going to be powered by AI? I mean, where do you see the opportunities here?
Sure. I mean, they're kind of limitless, right? So you can take your pick. I will say, actually, one of the areas that we think is going to benefit is the human capital management space, HCM. Our analysts were out with some survey results yesterday from some field work they've done. And we expect, I think 40% nearly of our respondents expect to see more spending in that space as a result of AI. So rather than the expectation being that AI is going to take the jobs, into the medium term, what we're finding actually is the expectation is people want those AI tools. And so we expect the spend to go up there. And then certainly cloud is another area where there's going to be benefit. I would even say that extends to autonomous vehicles. So depending on how many derivatives you want to go out, I think there's a lot there.
All right. Just logically, if so much more money in your mind is going to pour into artificial intelligence and the tech trade, it has to come from somewhere. Where does that money come from?
It's interesting. I think, part of it will be interesting to see how much of it is coming, back into the United States, because we know that earlier this year we did have some outflows. We also know that there's an unprecedented, well, maybe not unprecedented, but very high level of cash out there.
Are you talking about money markets, the 7.7 trillion there?
Yep.
Okay.
Yep, 100%.
So we've been talking about that money coming out of money markets for probably about 5 or 6 years that I can think of. It's been a lot of talk about that. Kobe Letter came out with some great data that the amount of money in money markets actually has doubled over the last 5 or 6 years. So it doesn't seem like the money's actually coming out. Let's say some of it does come out. Where does it go? Does it automatically go into the tech trade, or does it go to a broadening with the idea that we're going to get more rate cuts?
Yeah, I mean, I think both of those are possible. I mean, I think certainly that tech will take a big piece of that. I think that it is a big part of that fundamental secular growth narrative that people are focused on. But to your point, and I think that's where things could be different, at this point in the 5 years, is I think, we're starting to get a lot closer to being where we'd like to be in terms of the rate cycle. And so that could signal a difference, especially going into 26.
All right. Could be a difference going into 26. We had a guest yesterday said earnings. That's really the driver of this market. As great as the AI trade is, it's really all about earnings. So as we're going into the next earnings season, do you expect tech and communication services that have been leading this market to continue to outperform and drive it? Or do you see a catch-up trade in some other areas?
I think that tech will continue to outperform. I think it's just such a foundational and central part of what's moving right now. So we don't expect that to change. But I would say, too, because it is so fundamental and it's fueling a lot of efficiencies and gains and growth strategies and plans across the market, I think you could see some outperformance in other sectors, too. But I do think the font of it fundamentally is in tech.
One other question for you, Elise, before we let you go. There's a lot of momentum in the market. In fact, the MTUM ETF, the Momentum ETF, hit an all-time high yesterday. But at the same time, we're seeing money pour into gold and money pour out of Bitcoin and other cryptocurrencies. It seems a bit counterintuitive. What does that say about today's investor?
Well, I do think that there is a little bit of of a hedge in a sense. I think that there are tremendous growth opportunities out there, as we've discussed, but there are also a number of unknowns. And I do think that there is this underlying skittishness that is there. You don't see it in the S&P at the moment, but I do think when it comes to things like gold, I think that's where you see some of that express itself.